Hello, it's Klaus here, and this is another episode of daily analysis of synthetic index. And today we'll be analyzing the volatility 75. Volatility 25. Sorry, we'll be analyzing the volatility 25 index, and this is I'll say I somehow do dabble in this, like I do trade in this some of the time, not other frequent because I do more of 75. In fact, I'll say I trade 75 more than any other pair. So these videos I'm doing is to like broaden my experience with other peers, see how they go, how their chat interact with the system I use. That's what I'm trying to do, and to also help other people out there, people that need let's say you can't pay for course or you can't pay for mentorship. Because I didn't pay for mentorship, I did pay for a course. I paid for two courses. No, I paid three times. Two is from the same person, the one is a different person. So I paid for a course three times, and I would say the old three that I paid for, I don't actually use it in my trade currently. Where what I'm actually using is what I learned online from YouTube, from X. I learned from different places, even Telegram. Because there was a time I was in a group where some people post, I would like sit down, analyze, look at how they did. So all those I didn't learn from a mentor. But if you have money and your opportunity to learn from a mentor, that is very, very good. Make sure you are learning from a mentor that has experience, because the advantage of learning from a mentor is that when you are done learning, the mentor also gives you signals. That is the advantage of learning from said mentor. It's better than learning from a group, because if you learn from a group, after that period of learning, you are done. They then tell you that you should pay for signal. But if you are learning from a good mentor, that mentor, I would say, even during the process of you learning, is still giving you signals. So you are learning and you're also making money. So it's better to learn from a mentor. Just mentors are fucking expensive. I've seen mentors, I've had their prices, and I was like, damn, I don't have this. I don't have this money for that. So that's why I didn't pay or didn't go for mentorship. I just learned online. And I would say that might be what also affects my profitability in trades. But I would say I didn't learn from a mentor, and I don't even have that much money to put into it, because I have is the little money I make that I will put in it. I would say the highest money that I've even funded my account with was a hundred, $100, and that $100 I did make something out of it. I think I made up to 300, and obviously as I was making the money, I was removing some because I needed the money for something else. So eventually, when I blew the account, I knew that I've already removed more than the 100 I initially put inside. So that is by the way. So I would say if you are trading, if you have the money to pay for mentorship, that is if you have the money. If you don't have the money, you have to go around and be learning from different places. But if you have the money for mentorship, you pay for it. And make sure if you're paying for mentorship, you have money to still fund your account. Don't go be paying mentorship, because some people here will be paying mentorship. They'll say mentorship is 1,500 or $2,000, and then when you pay that $2,000, I don't know if the people paying think that the mentor will give them money to fund the account. So when you're paying, if your mentor is telling you that you pay 2,000 to fund the account, make sure 2,000 to pay for the mentorship. Make sure you have 2,000 to also fund the account. If you are paying 5,000 for the mentorship, make sure you have 5,000 to fund the account. Uh-huh. So that is that. So the previous one I said I will show um, the Yeah, this is the previous analysis I made that I was telling you about in the other one, where I got that cell. Let me see. Yeah, look at it here. This is it precisely. Now, if you look here, you will see there's a line there. Let me go to a far time frame. Okay, I think this is literally almost the same thing I posted on. Yeah. It's the same thing. This is the first line, then this is the second line, then this is where I took the trade from. But I didn't take the trade anyways. I was analyze it on here without actually taking the trade. When I analyzed it, it was here. The next time I came, it was around here. I think 2 days later. Then next thing I saw, it was here, and I was like, damn, if I had entered this, I would have made some money from there. So this was this I took it as liquidity hitting there. That is, I just said that this is probably liquidity being taken out because of here. So that is that for this anyways. So now back on the volatility 75. Let's see, what are we looking at? What are we looking at? This is a 24 hours time frame. This is a daily time frame. I won't say this is what we're gonna use, but if you are going to analyze this daily, yeah, I would say this is what you'll be seeing on a daily. This is this is the shift. This is the shift taking us to this shift is telling us to this shift is telling us to sell. That is what this shift is for. It's telling us that we are selling. That is on a daily, on the daily, telling us to sell. And then we have no, what the fuck am I doing? Not this. I just said this is telling us to shift. There are some other things that are being shown, but it's kind of not very, very accurate. I was saying on here, if you use this, yeah, now it's telling you around here to buy. You're buying to get up to here. Ultimately, you're buying to get up to here. We will still sell. We are going to sell, but for now, we are going to buy up to here. Then from here, you can start looking for your sell again, or from here. But this is the daily, so I don't use daily because it's kind of fucking confusing. So we should go to the 4 hours time frame. Then we look at where we are pointing, where we are using, and all that. So on the 4 hours time frame, okay, we'll still use this. This is the lowest we can find. Let's go back to this to mark it up. Now we mark it. That is the lowest, and then this is the high. So this is our new low, our new high. So this is our point of interest. These two places are our point of interest. So we get back to the 4 hours time frame. We have our point of interest. We have where we are trading around. Now we get to here. You can drag this. I'm not a professional. So if what I'm doing is wrong, well, that is that. I'm just like this is what I normally do or what I normally see in order to get any trade or to put an interest in any place. So currently this is our point of interest. This is another point of interest. So put OB, yeah. What the fuck? Nah, yeah, that is that. Now let's see what actually makes this market move. What makes this market move? Because I would say this is not looking easy. Looking kind of like it's difficult to navigate. So I have to put some other things so I'll understand what I'm actually looking at. This here. Then we have another here. We have another here, which got mitigated. This one used, I think it used this. Then come up to here. We have another one here. Mind you, there are FVGs around here. There are FVGs. Like if you see here, there's an FVG here. And then when you come here, there's another FVG. That is a fair value gap. Then this one was still kind of being respected up to here. So all these are BOS breakout structure, I think. We have minor ones here. But this is like the biggest we've had since this whole movement. Then when you come here, you have this, which hasn't been mitigated. So you see here, mitigated. It was touched multiple times. After first to second, the third one gave us a huge move. So now we have this. This is our point of interest here. This is our current point of interest because market has to come up to here. If this market wants to hit up to this very down part, this is very down, it has to come up to here before it can get there and start going up. I think that is what is going to happen. So we have this. Um, yeah, it wasn't mitigated, so this one is still kind of valid. But we'll get to the 1 hour time frame to see because here we have to go lower because it's not still all that clear to me. I don't know if it's clear to you that is watching, but for me it's not all that clear. So I can't really see what's gonna happen here. So let me map up some things. Yeah, yeah, yeah. Ooh, yep. Now we should go to the 1 hour time frame because this place is looking like it wants to shift. But what are you telling us? 1 hour? Yep, yep, yep. Mm-hmm. So yeah, currently you're buying. You buy to here. This, if you want to buy, you're buying. This is your target focus. You buy up to this level. Then after here, that's when you then say probably the sell. From buying up to here before you go for the sell. Like let's say if you're putting your TP1, TP2, TP3. Let me we should use this fair value gap as that. So let's see. Yeah, fair value gap. If you're using fair value gap, yeah. These are your TPB. Let's say you're entering from here. This should be your first TP. This should be your second TP. Then if you want to drag it all the way to the top, this should be your third TP. Then you might still do up to here, but I feel that will be risky. So this is your entry. Your entry is around here. First TP, second TP, third TP. That will be that. So just screenshot it because I'll delete this. That is, if you find this interesting, you screenshot it. I'll be deleting it now. Then I'll do some other kind of little analysis to actually get what I'm looking for. And mind you, I don't know all these technical terms. So in case if someone can say, yeah, dumbass or shit, I don't know all these technical terms. I learned with the technical terms. What I just learned was understood what they work or their function or where they have to be. But their names, they escape me. They escape my mind every time. So I don't get them. So yeah, we are using this. Oh, is it this? This one here was mitigated. So okay, this is what we'll be using. This one here for the buy. Yep. This it touched it and then it went up. One thing is that you can just use all this because it was almost cleaned it up. So you could also use from here. So it's almost cleaned it up. So it was just a little bit of gap. So you can use from here. Now this is buying. We get up to here, we give us some drawdown. Okay, give us some drawdown here. This is what I'm talking about. Yeah, you can see. All these I'm using is price action. I don't use indicators because indicators confuse me. Most people use indicators to understand the market trend. But if you can use technical analysis, you can get the accurate trend without stressing yourself to understand what the MM15, MM30, or 100, or whatever they call themselves stands for or work. Because sometimes those things they delay. That is when I used it. I don't know about now. I haven't used it for a very, very long time. I mostly just analyze by myself technically. So, yeah, we'll say if you want to get in on this trade, yeah, you should just say it might get back up to here. Get back up to here. Though you might lose it if you are saying it will get back up to here. There's a possibility it won't. So if you just put there, this is a long position. Your target, this is for full target. This is it. But you can go before, like you can take the trade through your TP way before this my target. Yeah. Now this SL, there is one mistake I did the previous video. When you're putting your SL, you shouldn't put it at this curve itself, because the end of the previous high. You should give it some gap, some breathing space, because sometimes it doesn't reach the end of it sometimes, but there are sometimes where it reach the end of it just to remove some buyers or some sellers. So you give it some breathing space. So if you eventually see hit that your breathing space, then you know, yeah, that was a wrong call. So I gave it a breathing space on this one. The other one, it was after the end of the video. That's when I saw the mistake. So I gave it the breathing space, but it wasn't in the video. So I just remembered it and I said, let me talk about it. You can also just move it up to this down. Yeah. Yeah. So we are going to trade this up to here. And then you can take half of it where there's this. Okay. If you want to take half of this is how I normally calculate mine sometimes. So this is the 50%. You can put your first TP here and then your second TP there. But if you want to use the Fibonacci, which I said you just screenshot, that had more reasonable processes for your TPs. So that is all I have to do for today, and we are done. I hope you all will subscribe and like and recommend this video to other people, probably, possibly, if you find it entertaining or if you find it educational. And if you use it and you make some money, good for you. If you don't, good for you, because I said this is not, I'm not giving you trades. I'm mostly just dropping out my trading journey, my analytical journey. So in the next 2 years or in the next 6 months, when I look back, I'll see if I've improved or if I'm still in the same place. That is why it's like a journal. They say when you're trading, you have to write a journal. But I don't know how to write that journal. They say you have to have a trading journal. I tried writing it on the paper, even on my phone. Bruh, I always forget about that thing. So it makes I still do some mistake. But now I'm doing it on the video. As I'm doing it on the video, as I'm talking about it, is coming in my mind and all that. So this is a trading journal where I drop my analysis. So I hope you find it educational and useful. Thank you. I hope we'll meet again and in good conditions. Till next time.